right, then in part D of the required, you need to discuss the errors in the break-even point calculation performed by the junior accountant and provide guidance so that the calculation can be reperformed correctly. All right, so please be careful. There's two parts to the required over here. First, you need to discuss the errors that he's made, and then you also need to provide guidance so that the calculation can be reperformed correctly. So please make sure that you answer both parts of the required over there. And then in addition to that, you are not required to perform any calculations. So please don't recalculate the break-even point correctly. This is purely a discussion question. And there's 1 mark available for communication skills, and that is awarded for logical arguments. All right, so let's go and have a look at his calculation in detail. So first, he's calculating fixed costs, obviously to be used in this part of the formula over here. So in the calculation of fixed costs, he has highest estimate used to be conservative. Now, guys, you'll see this amount over here ties into the previous page. If we go back, it's this amount over here. So what he's doing, instead of taking this total annual manufacturing overhead cost and using the high-low method to split it into the fixed and variable portions, he's just taking the highest cost over here and he's including that in the calculation of fixed costs. Now, that's obviously incorrect because the cost includes both a fixed and a variable portion, so it should be split out. And in the calculation of fixed costs, we should only take into account the fixed portion, and the variable portion will be taken into account when we calculate the contribution per unit. So make sure that you answer both parts of the required over here. Firstly, discuss the error. The error is that he's included a semi-variable cost in the calculation of total fixed costs, and that's not correct. How should this be corrected? He should use the high-low method to split that cost into its fixed and variable portions. The fixed cost should be included in the calculation of fixed costs, and the variable portion should be included in the calculation of contribution per unit. All right. And then obviously, guys, we know that that amount over there excludes depreciation. We know that this excludes depreciation. So separately, we have depreciation of 252,000 Rand per annum. And if we have a look at his calculation, he is not including the depreciation in the calculation. And he's saying the reason why he's excluding it is because it's non-cash. All right, so again, this is deliberately there. This is intentional because a lot of students make this mistake in their calculation of break-even point. Remember, guys, what is the break-even point? It's the point where the company does not make a profit or a loss. We are not looking at cash flows. We are looking at any income and any expenses that affect profit and loss. If the expense affects profit and loss, it must be taken into account in your calculation. So we include cash flows and we include non-cash items because this depreciation over here is going to be an expense that affects profit and loss. So it must be taken into account in the break-even point calculation. We don't exclude it because it's non-cash. So make sure you answer the required correctly. First, what did he do incorrectly? He has not included depreciation in the calculation. What should he do? Depreciation is an expense that affects profit and loss, so it must be included in the calculation. So let's just jump to the suggested solution. We can mark these things off as we go. So first we said he incorrectly included the total manufacturing overhead, excluding depreciation, in the calculation of fixed costs. So that's what he did incorrectly. How should it be corrected? The high-low method should be used to split the semi-variable cost into its fixed and variable portions, and only the fixed portion should be included in the calculation of fixed costs. The variable portion should be included in the calculation of contribution per unit. Then we also said he's incorrectly excluded depreciation on the factory buildings and machines in the calculation of fixed costs. This is an expense that affects profit and loss and should therefore be included in the calculation of fixed costs. Okay, then the next item he has over here is the delivery fees and non-refundable import duties, and he's just put that amount in there. Now, firstly, that's not an annual cost. This is the cost per order. If you go back to the previous page, that's the cost per order. It's not an annual cost, and we are trying to calculate annual fixed cost over here, so that's incorrect. Secondly, that's definitely not a fixed cost. It is a variable cost. It's going to vary depending on the amount of leather that's imported. So it's definitely going to be a variable cost and should not be included in the calculation of fixed costs. Instead, we know in terms of IAS 2 that it should be included in the value of inventory. So over here where he's calculating the cost of leather per unit for the executive chair, he should be including the delivery fee and the non-refundable import duties, exactly like we did in part A of the required, where we took the cost of the leather, we added the delivery fees and the import duties to that, and then we calculated the cost per meter and the cost per unit. So it should be included over here instead. All right, so he has incorrectly included delivery fees and non-refundable import duties in the calculation of fixed costs. The delivery fees and the non-refundable import duties is a variable cost, and in terms of IAS 2, the cost should be included in the cost of leather and taken into account in the calculation of contribution per unit. Okay, so those are all of the fixed costs. But now, obviously, guys, you need to always consider, has something been missed? So when you're checking somebody else's calculation, has he included all fixed costs that he should have included in this calculation? And I know I keep saying he, and there's no indication whether this is a he or she, but it's obviously much easier to just keep saying he instead of he or she, he or she, he or she. If you think that this is a she, you are welcome to rather refer to the junior accountant as a she. Okay. What has been excluded from this calculation? Go back. There is one other fixed cost that he has not taken into account, and that is the admin costs over here. So the admin costs should be included in the calculation, and not the monthly admin cost of 80,000 Rand, but the annual cost should be included in the calculation. All right, so he's incorrectly excluded the fixed admin costs from the calculation of fixed costs. This is an expense that affects profit and loss and should therefore be included in the calculation. All right, guys, so the reason why I did that is this is also a common mistake made by students is often what happens is you get a bit confused with product costs and period costs and what calculations you're performing. Remember, at this point in time, we're not trying to value inventory. We are trying to calculate the break-even point. So we don't only include product costs in the calculation. We include both product costs and period costs, because all costs that affect profit and loss should be taken into account when we are calculating the break-even point. All right, so that deals with the fixed costs. Then he calculates the selling price per unit, because obviously before we can calculate the contribution per unit, we need this selling price per unit. So we need the prime cost, because we know that the selling price per unit is based on the prime costs. So first we need the prime cost, we then need to add a markup of 60%, and that will give us the selling price per unit. Now, we did also calculate the prime cost in part A of the required, so you can compare this to our calculation, where we obviously did it correctly, and you'll be able to identify the mistakes that the junior accountant has made. So, firstly, this cost over here is incorrect. And the reason why the cost is incorrect is, firstly, the import duties and the delivery fees have not been included in that calculation, but we have already addressed that, so you don't need to say that again. We addressed that previously. But another mistake is, this is the cost per square meter. That is not the cost per unit. You are dividing by 800 square meters. It gives you the cost per square meter. But we know that in order to make one chair, they need 2 meters of leather per unit. So you actually need to multiply that by 2 in order to get the correct unit cost. Okay, so he has incorrectly included the cost of leather per square meter as the unit cost. The cost per square meter should be multiplied by 2 square meters per unit to get the unit cost. All right, then for fabric, that calculation is correct. You've got the cost per meter multiplied by the number of meters required per unit. For other direct material costs, both of those costs over there are correct. They are the unit costs. Direct labor, over here we have a problem. That 50 Rand over there is the labor rate per hour. you need to multiply that by the number of hours that it takes to make each unit, and that will then give you the labor cost per unit. So once again, guys, we did already perform this calculation in part A. Let's actually quickly jump back to part A. Here's our calculations over here. There's direct labor. First, we took the minutes and we divided by 60 in order to get the number of hours in order to make 1 unit. We multiplied that by 50 Rand per hour to get the unit cost. So that's what he should have done. All right, so he has incorrectly included the direct labor rate per hour as the unit cost for both products. The labor rate per hour should be multiplied by the number of labor hours required per unit in order to get the unit cost. Okay, so that's obviously incorrect. Then he calculates the prime cost. He then correctly applies a markup of 60%. If you add 60%, you'll see you then come to these selling prices. So although his selling price is obviously incorrect because the previous calculations are incorrect, he has performed that calculation correctly. And if he corrects everything else over here, then this selling price will also be correct. The logic there is fine. All right, then he calculates the contribution per unit, which remember is the selling price per unit minus the variable costs. So the selling price per unit comes from above, and obviously once he corrects all of the previous errors, that will then also be correct. He then deducts the prime costs, and we've already discussed the errors made in the calculation of the prime costs. He then deducts selling costs, which is great because remember we have the selling cost over here, which is 5% of revenue, and that is also a variable cost. And even though it is a period cost, he should be taking it into account because we are calculating the break-even point. So we take into account product and period costs. All income and all expenses that affect profit and loss are taken into account in this calculation. So he's at least done that correctly. He didn't ignore it by mistake or leave it out by mistake. And it's just obviously 5% of the selling price per unit. And that then gives him the contribution per unit. So everything there is fine. Now we have a problem over here where he calculates an average contribution per unit, where he just takes these two, adds them together, and divides by 2 to get an average. Now, guys, that's incorrect. You know that. We need to calculate a weighted average contribution per unit, and we use the sales mix to do that, so your sales units. So what he should be doing is, here's the number of units that they expect to sell. 1,800 executive chairs and 5,400 classic chairs. You need to add those together to get the total. And you use that sales mix in order to calculate the weighted average contribution per unit. So you're going to take the executive chair and you're going to multiply this by, I've already forgotten the numbers, 1,800 over the total. So what is the total going to be? 1,800 plus 5,400 is 7,200. Then for the classic chair, multiply that by 5,400 over 7,200. And once you've done that, once you've multiplied everything out over there, you just add those together, and that will give you the weighted average contribution per unit. All right, so this calculation over here plus this calculation over here, which you should definitely be fine with because we've done plenty of those types of calculations. But that's the final mistake that he made, because over here everything's fine. If he uses the correct fixed costs and the correct weighted contribution per unit, he's rounded up correctly, so everything else there is fine. He hasn't split this between the two products, but maybe he didn't want to split it between the two products, or it wasn't required. But remember, if you do need to split it between the two different products, again, you would just multiply by that same sales mix. So you would multiply here by, oh, and this is really shocking, guys, 1,800 over 7,200 and by 5,400 over 7,200. All right, so that's how you would just split that between the two different products. So let's just wrap this up. He's incorrectly calculated the average contribution per unit. Instead, a weighted average contribution per unit should be calculated using budgeted sales volumes. So using the 1,800 executive chairs and 5,400 classic chairs. All right, guys, so that then brings us to the end of this question. Thank you.